Home prices. Many are shocked. We're not shocked, but many people are shocked. Let's talk about what's happening with home prices. Hey everybody, JJ here. Bull, boom, bear, bust. Let's get right into the news. Home prices have not declined, and actually they are increasing. They are up year over year, and even in April, amidst the shutdown, home prices did not drop even from the previous month, according to a recent Redfin report here. Now, why do I say home price shock? Well, a lot of people were predicting that there's going to be a home price crash. Now, we've been saying on this channel, it's not that simple. Home prices do not crash. Even in the great housing bubble bust in 2008, home prices dropped, but it took several months to play out. Home prices do not crash. The buying and selling of a home can take several months between the signing and the closing and the inspections and the funding, right? Appraisals, all those things. So add that on top of what's happening right now with so they're pulling their home off the market. They're waiting for this whole sickness outbreak to pass and for the economy to be reopened. Unfortunately, I think a lot of these home sellers are going to be unpleasantly surprised when they do put their home back on the market, maybe this summer, maybe this fall, at the pool of buyers is still going to be greatly diminished, right? So a lot of these sellers are going to be hurting themselves more than helping themselves by choosing not to sell their homes. Recent Redfin article, home buyer demand outpaced supply mid-pandemic, leading to lower sales and preventing price declines. You see, it's all about supply and demand, right? Even though it's harder to get a mortgage right now with the banks tightening up and requiring higher credit scores and requiring bigger down payments, many banks are doing that, and we're not seeing big price cuts as of yet. Let's talk about the numbers here. The supply of homes down 24%, but home prices still up 5% year over year. All right, first of all, look at this chart here. You would think with such a big drop off in sales, this is a record decline in home sales, you would think we would see falling prices, but no, the inventory is also low. Now, just a brutal drop in sales. Obviously, many sellers pulling their home off the market, waiting to see what happens. But we'll still look at the chart here anyway. We see an unprecedented drop in home sales, and this is April. We were most of the country, we were in shutdown mode in April. So it's surprising a lot of people that the prices did not drop. But let's take a look at the home price numbers now, the median price. First, we'll look at a chart here. Median sales price in April, $303,900. Even from the month prior, from March, they're up a fraction, 0.3%. Year over year, up almost 5%. So no price drops yet. In fact, prices are still increasing. So will we see price declines at some point? Absolutely, I think at some point. But remember, it's a very slow moving market, and there's a lot of uncertainty right now, a lot of sellers taking the waiting and see approach. So the price declines could take quite a while to play out. I'm thinking 3, maybe even to 6 months before we start seeing prices really make significant declines. All right, also out of the same article here, out of Redfin, we do see the home price growth is declining. We do see it. We did see it drop when interest rates were being raised at the end of 2019, but since then, mortgage rates, interest rates alike were being lowered. Thus, the home prices started increasing. But we did see this peak right about here. So looking at the chart here, we do see the 4.9% here to the far right for the most recent month here, April 2020. And when we compare that to coming out of the financial crisis, we do see it's much lower than initially. We had 10, 13% price growth, 14% one year over year. So prices are still up year over year. Prices still rising, just not as fast as they were. And down the road, again, I think in a few months we're going to start seeing price declines, and we could likely see this go into the negative down here. And we're going to keep an eye on it for you, of course. How drastically are sellers pulling their homes off of the market? Let's take a look at another chart here. This is a year-over-year decline in active listings of 24%. Right, so a couple things to look at. You have one, the people choosing not to put their home on the market, waiting for the market to recover, waiting for this V-shaped recovery that's not going to happen. And then two, you have the forbearance. A lot of people that normally would be selling their home, they're also just kind of sitting tight right now, knowing that their home cannot get foreclosed, that their payments are being forgiven for a few months, but ultimately, again, it's not going to eliminate those payments. It's just going to be added on, in many cases, to the back of the loan. So when the forbearance is done, there's still going to be a lot of pain for many homeowners, and you're likely going to see an uptick in homes being listed for sale again here in a few months. Now, the cities with the biggest price increases, surprisingly, are not the coastal cities. As we see more people leaving the more expensive cities now, cities like Detroit are seeing big price growth with nearly 28% rise year over year prices in Detroit. Memphis, Tennessee is up 22% year over year. Philadelphia up 19%. Newark, New Jersey up almost 19%. And Pittsburgh up about 17% year over year. And yes, with everything happening right now, we are seeing even a bigger exodus from the big expensive cities. And we talked about a few reports ago how, for example, Los Angeles, we see half of Los Angeles unemployed. In this report we put out here, 50% of Los Angeles unemployed. Now let's talk about forbearance and missed mortgage payments. It's now up to over 4 million Americans now are skipping their mortgage payments. And that puts the total now at over 8% of all mortgages are in forbearance as of May 10th. And in a week that increased quite significantly. It was only 7.91% as of May 3rd. So while the number of mortgages going into forbearance has slowed down, it still is increasing. Now, home prices not rising so much in California. Let's take a look at the California Association of Realtors report right here. And let's go down to this first sentence right here. April's median statewide home price, $606,410. That's actually down 1% from March, and it's barely up a fraction of a percent year over year. So price declining month to month. Will it continue? Well, remember, California did see some of the worst job losses out of all the states. Not just the total numbers, because obviously it's a bigger population here in California. We're a big state, but on a per capita basis, also the job losses were quite enormous here in California. And year over year, we're barely up 0.6%. I'm expecting California to start seeing year over year price declines. We'll be one of the first states here, kind of a canary in the coal mine. Even with the record low mortgage rates and the record low inventory, home prices still looking very weak overall, especially in California. So we're going to have to keep an eye on it. Also, something to factor into the big picture here, about 30% of Americans have raided their retirement savings during this time. So the pool of buyers on the other side of this is going to be greatly diminished. And now with the banks looking to get bigger down payments here, a lot of times now it's going to be 20% from many of the too big to fail banks. All right, so just to sum it up here, nationwide, not seeing any price drops yet, up month over month, up year over year. California, however, starting to see a little bit of a price dip month over month, still barely up a fraction of a percent year over year. And I'd like to hear from you down in the comments on this. What do you see happening in the housing market? We're going to start seeing prices decline in the summer, in the fall. But I can tell you one thing for sure. This market would absolutely be obliterated. This real estate market would be crushed without the intervention, without the forbearance, without the assistance, without the propping up of the banking system, with all of the billions in repo injections that we've been seeing now for over 6 months. And who knows what else is happening behind the scenes. Remember, this is a non-transparent monetary system that we have right now. No one knows what's happening at the Fed. They're not auditable. They operate in the dark. They don't have to be transparent. It could be even much worse than we've been reporting here. There's a whole bunch that we're not allowed to see, unfortunately. But this is the way it is. But I'd like to hear from you down in comments. What do you see happening in this housing market? And maybe you're planning on buying a home at some point. Maybe you're holding off right now. Maybe you're pulling the trigger right now. Maybe you are in the middle of closing because you think there's not going to be any pain, any correction in the housing market. Let us know what you're thinking down there in comments. I'd like to read it. Thanks everybody for watching. Please give us a thumbs up if you like what we talk about, and come back for more financial news and economic reports. Bye for now. Today's episode is sponsored by Boxable Homes. These are high-quality, sturdy homes that can be even hauled using a pickup truck. Boxable Homes fit a lot of luxury in a small, inexpensive, energy-efficient space. These homes are factory-built in the USA and can be shipped to all 50 states and internationally. These homes come fully loaded with wiring, heating, cooling, plumbing, and appliances. Have some extra space in your yard? These will make excellent supplemental income properties, granny flats, or guest homes. These homes are built tough and can withstand fire and weather disasters. Save $100 off your new boxable home today by clicking the link below.